One of the things I see a lot of as an advisor and as previously a seller of a business, and things I've even considered myself, was the idea of the headline price or the headline multiple compared to the terms of the deal. So as a seller, you're going to want all cash up front. You're going to want quick close. You're going to want very little due diligence. And as a buyer, you're going to want the entire deal to be earned out over time, or certain milestones along the way to de-risk it. The beauty of deal structure is it allows deals that are maybe impossible for either side to find some common ground and get done. And so we're seeing a lot of that happen. Our job as advisors is really to help give you the deal that you want. And that doesn't necessarily always mean just cash up front, because that could actually be lower than the total value if you work with somebody who is willing to reward you for the upside. What I'd say is, as you're considering selling your business, don't just think about the headline multiple. Don't just think about the headline price, but also consider what terms you're willing to be flexible with. The more flexible you can be, the more ability the buyer has to create something that could be appealing to you, which ultimately gives you more options and gives you, honestly, more leverage when you're in that process and working with multiple buyers. So if you have questions about deal structure, what we're seeing in the market now, how it might affect your business in particular, every business is different. And depending on the type of risk or things that buyer is trying to mitigate for, that often dictates what sort of structures you will most likely see. And even though we're not the ones providing the structure, we can tell you kind of what we're seeing and what you're most likely going to see when you go to sell the business. So please reach out to us, and we'd be happy to do a valuation of the business and share with you what the most likely deal terms are that you could potentially see.